Market structure is one of the most hot topics in the trading space, but most trading channels are either busy repeating the same market structure videos for more ad revenue or have no clue what it actually means. So in this video we are going to look at what is bullish and bearish market structure, what is break-off structure, what qualifies as a valid change of character or market structure shift, possible scenarios for long and short according to market structure, high probability way of trading market structure, and lastly the topic that has leveled up my trading game a lot, alternate strategies to market structure. So let's get started. First of all, we will be discussing what is a bullish and bearish market structure. Bullish market structure usually occurs when price is forming what? Higher highs and higher lows. As you can see here, price is forming higher highs and higher lows. Higher highs and higher lows. And what is the market doing? The market is trending upwards. Bearish market structure on the other hand occurs when price is forming lower highs and lower lows. As you can see in this schematic, price is forming lower highs and lower lows, lower highs, lower lows, lower highs, lower lows. And where is the market trending? The market is trending downwards. An important point to remember here is that market structure on the higher time frame, that is 4 hours or greater, would give you a more reliable and clearer signal. My preferred time frame for identifying structure are 4 hours, and to take entries are 30 minutes, 15 minutes and 1 minute. An important thing to remember is that market structure usually isn't that clear as I showed you in the previous diagram. Instead, it is a little complicated and the actual version looks like this. A bullish market structure will have much of an internal structure between the higher high and the higher low, and then it will move forward for another higher high. Similarly, the bearish structure will have some internal structure going on between the lower low and the higher low, and then it will create another leg downwards to create a lower low. Here is an example of a bullish market structure. What you can see on the diagram, you can see that there are higher highs and higher lows as it is evident on the chart. Higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. I hope the market structure, basic bullish market structure is clear to you guys. And where is the market trending? The market is trending upward. Next up, we have an example of a bearish market structure. What you can see on the diagram? You can see lower lows and lower highs. Let's mark them together. Lower lows, lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, lower highs, lower lows, lower highs, lower low. And where is the market trending? The market is trending downwards. And what will you prefer in this type of market? Shorts would be preferred in a bearish market structure. And what would be preferred in the bullish market structure? Longs would be preferred in the bullish market structure. So now let's move on to our next topic and study what is break-off structure. Break-off structure is basically when in a bullish or an uptrending market, we make a higher high and a higher low. Like in the previous examples, you can see in this bullish market structure, if we can erase all this, you can see we had this high that I'm marking with the orange, and when we broke this high and created another high which I'm marking with the pink color, we basically broke the structure. We broke this high that was marked in the orange and created another higher high. This is basically termed as BOS or break of what? Break of structure. Why? Because we created a higher high by breaking the previous high that was marked in the orange. Similarly, in a downtrending market or a bearish trend, if we create a lower high and a lower low, it means we are breaking the structure. You can see in this diagram we were trending downwards, and when we broke this low which I am marking with the orange and created a new low which I am marking with the pink color, this would be a lower low. This would be orange one would be our initial low. When we broke our initial low and created a lower low marked with the pink, this is basically called break of structure or BOS. And this is in a bearish market or a downtrending market or a bearish market structure. Break of structure is confirmed by a candle closure above the previous high or below the previous low. My preferred time frame for seeing break of structure is the 4-hour time frame or greater. Now here are some schematics that better visualize the break of structure concept, and we have also previously seen some examples. As you can see, when we created a higher high here marked with the orange, after breaching the previous high that I am coloring with the pink color, this was a break of structure. Here too, in the bearish pattern as well, when we broke the initial low that I am marking with the pink color and created a lower low that I am marking with the orange, this resulted in what? In a break of structure. And my preferred time frame for seeing break of structure patterns is on the 4-hour or greater. Now an important thing to remember is that a market can never be continuously bullish or bearish, and trend changes happen more often than not. There are two main things to remember regarding trend change. Firstly, trend change happens when there is a failure to respect break of structure, when you are unable to create higher highs in a uptrending market and lower lows in a downtrending market. Secondly, trend changes occur at a higher time frame PD array. Now we have studied many PD arrays in the previous videos, so you can check them out. Now let's suppose, for example, you are viewing a 4-hour structure, then the trend change will occur at a daily PD array. You just jump one time frame. Let's suppose that I am seeing the daily structure. So where would I mark my higher time frame PD array? On the weekly level. Just jump one time frame above. Daily would be my structure, then the higher time frame PD arrays would be marked on which chart? On the weekly chart. Now for a valid trend change, there are two most important requirements. Firstly, we must have displacement. Secondly, we must have candle closures. Let's look at some examples to confirm this further. Here you can see we were in a bullish uptrend. Here was the high, here was the higher low, then we had a higher high. Now when we were unable to hold this higher low and broke through it with displacement, you can see there were many down close candles here. When we broke through it with displacement, that is, we broke through this higher low with displacement, a trend change occurred and market started to trend downward. So what was the first condition for trend change? It was displacement. Was it satisfied here? Yes, it was satisfied here. Now let's look at an example where the trend change couldn't happen because there was no displacement. You can see market was in a bearish downtrend, and here we tried to close above it, but there was no displacement. No displacement. So what happened? The trend remained bearish. So the first and foremost important thing for trend changes is what? Displacement. Displacement is the first and foremost thing for trend changes to happen. And if you have displacement, it means you have trend changes. Now let's look at possible long and short scenarios using market structure. Firstly, we will look at long scenarios. So there are two scenarios for longing. Firstly, it is the front running scenario. This happens when price is unable to take the sell side liquidity at the previous low and just taps the order block or some higher time frame PD array in the discounted region and bounces towards the higher high. And the second scenario is where the price comes and takes the sell side liquidity on this higher low and then jumps towards a higher high. Now let's look at some examples for this. Here you can see this is a higher time frame outlook of the Euro USD chart, and we have a daily order block level marked here. Price should respect this if we are in a bullish uptrend. Zooming on the lower time frame chart such as the 15-minute, we got a trend change. As you can see, price closed above this high, that was the previous high. Price started to close above this, and we also got displacement here. So we could have longed here, took a chance and placed a stop loss here. this could have resulted in a possible 3 to 2 hour trade. So what did we did? So which scenario was this? This was scenario 1, in which price came and took the stops on the daily order block. However, it didn't breach this low. If it had breached this low, it would have been scenario 2. So which scenario did we consider for longing here? Scenario 1. And what did we see on the lower time frame to long? We see a change of character or a trend change on the 15-minute chart and acceptance above it with displacement and with candle closures to long it towards the top side. Now let's look at possible short scenarios using market structure. Similar to the long scenarios, there are two possible short scenarios. First scenario is that price comes in a higher time frame order block, doesn't take this sell a buy side liquidity and drops to the lower side. A thing to remember here is that the order block should be in a premium area. Second scenario of shorting is that price comes and takes out this high, takes out the buy side liquidity and then reduces to taking the lower low. Now let's look at an example of the bearish case. As you can see, this is a higher time frame outlook of the Dixie chart. Here is a previous lower high and this is the previous lower low. We have marked these levels and now we move on to the lower time frame. As you can see, price came and took this higher time frame lower high, took the buy side liquidity and then moved towards trending down. So what was this scenario? This was scenario 2, in which we take the stop losses or the buy side liquidity and then we perform the real move. Now we move on to the high probability way of trading market structure. So I have highlighted a 4-step procedure to trade market structure in a high probability way. First of all, identify the higher time frame PD array, such as on the daily or the 4-hourly chart. Secondly, after identifying the higher time frame PD array, identify which scenario it would be, 1 or 2. Thirdly, wait for the red folder news and wait for it to take out the swing highs or swing low or tap in the order block considering the scenario. Fourthly, go on the lower time frame chart such as the 5-minute or 15-minute and wait for a trend change or reversal. Here you can see on the daily chart of GBP USD, this is a low, this is a high and this is the daily fair value gap, which is in what? It is in the premium area. And if price comes and tags this level, we will look for sells. Now let's come on to the lower time frame such as the 4-hour. Here you can see price came and tagged this daily fair value gap on the red folder news. So first 3 steps are satisfied. First step was identifying a higher time frame PD array. We did it. Second step was identifying which type of scenario is this. We identified this is the second type of scenario. Why? Because it took out these stop losses. This buy side liquidity was taken. Thirdly, on the red folder news, it came and took out these stop losses. So 3 scenarios are satisfied. Now fourth step, we come on to how will we execute on the lower time frame such as the 5-minute and the 15-minute. Now here you can see on the lower time frame, as price broke this level, we would start shorting the market and with stop losses above this high, targeting the lows for at least a 2 to 3 hour trade. So I hope this high probability way of trading market structure was clear. Now an alternate way to market structure is the range and trend trading strategy, which I learned from Trader SZ. Now markets are usually either trending or ranging. It can't be both at the same time. When the markets are ranging, you can short the market at the sweep of the highs at the 4-hour and long the market at the sweep of the lows of the 4-hour. Let's look at an example. Here you can see in the green boxes on the GBP USD 4-hour chart, you can see market is in a range bound environment. However, on the red boxes, you can see market is trending. So market could either be ranging or trending. And what did we learn? If market is ranging, we can short the market at the sweep of the 4-hour highs and long the market at the sweep of the 4-hour lows. Now let's look at an example for a ranging market. Here you can see we have a GBP USD chart on the 4-hour, and as we swept the 4-hour high and closed back inside, this was a valid short with a stop loss above the highs targeting the lows. Let's look at the lower time frame for execution. Here you can see we broke the lows and started to close below this level with displacement. So this would be a short trigger, and we must have started to short with a stop loss above the highs targeting the lows. So this could be a 4 to 5 hour trade. Now let's look at how would we trade a trending market. To trade a trending market, we must wait for a lower time frame range such as the 30-minute range to form either above, listen to this carefully, either above the swing highs or below the swing lows. If a market is downtrending, wait for the highs of the lower time frame to get swept and get short. If the market is uptrending, wait for the lows of the lower time frame range to get swept and then long. So let's look at an example of a trending market. Here you can see on the GBP USD 4-hour chart, we broke out of the 4-hour range high. And when we break out of a ranging market, it usually results in a trending market. So after we broke out from here, what we did? We waited for a lower time frame range to form. Okay, so we waited for a lower time frame range to form. Let's look at a lower time frame such as the 30-minute. Now, once a lower time frame range has formed, and when we took out these lows at the 30-minute chart and closed back inside, it was an indication for us to long towards these highs. So this is how you trade a trending market, and the range and trending system is basically an alternate system to the market structure, and it works great considered to the market structure.